What's up traders, welcome to Failure to Displace, and in this video I'm going to go through my step-by-step process to execute on the newly released ICT Cameron model. So this is the model that ICT has just put together for his son Cameron. He's been trading it with great success, and ICT recently announced the breakdown of how this works. The model presented itself perfectly this morning on EURUSD, so I thought it would be a fantastic time to walk you through the process and the analysis that led to this pretty epic 5R trade. Let's jump into the higher time frame analysis now and see how we came up with this entry. Here we are in our 15-minute time frame. We're going to be using our session liquidity tracker to monitor untapped levels of previous session liquidity. So where we see the green extended lines, these are untapped levels. When the level's taken, the line will turn red here. Links to all the indicators that I use, including the session liquidity tracker, are all in the description below. So if you'd like to follow along and set your charts up to look like mine, details are available there. So we can see after FOMC last night, we've had a very aggressive move down. We'll know we've read for the news, I've mentioned it in the past, that I do expect these massive inefficiencies to actually get filled. So this big drop could potentially lead to a bullish price action today where we retrace the majority of this. So it does give me kind of a bullish inclination before we even start. We can see coming into the London session, we've got Asia high here. So we've got untapped liquidity at the top of Asia session. And then we have the Asia low as well, also untapped. We're currently in the middle of the range. We've got two bullish fair value gaps, two bearish fair value gaps. So kind of neutral going into this. Price could go either way. So I need some clarification of where price is likely to go before I'm interested in taking a trade. Looking at the news folders, we have no news on for euro or for the dollar in the London session. So we should be clear to go. We do have news later on in the US session, but I'm not worried about that. We'll see here that there is news on the Swiss franc. Now, this does play a part in price action, which actually surprised me. I didn't realize that this would affect price action. We'll get to that in the analysis. So keep a note of that at 3:30 AM. So what we're going to do, because we're kind of neutral at the moment with no particular bias, we'll drop down onto the 5-minute time frame, start scrolling through and see what's going to be presented to us. Specifically looking at a sweep of the Asia low or potentially a sweep of the Asia high into a new week opening gap. Untapped liquidity above us here as well. We'll just highlight this swing high at this point. We do have some buy side there, which could cause a reaction if we aggressively go higher. We'll go to the 5-minute time frame now. And we'll start skipping through price action. So as always, our London session where we start monitoring price starts at 1 AM. The reason I'm looking at 1 AM for London is this is the open of a new 4-hour candle, and as the new 4-hour candle opens, we can see an injection of volume at that time. So it's worth keeping an eye on price action at this time just to see if we can get involved. So the London session opens and not much is happening, as you can see. We're just consolidating in the middle of the range. So as we're coming into the new hour, so this is 2 AM now, we can see we're getting slightly larger candle there. And we can see we're starting to push higher. We've taken this high and we're creating fair value gaps now going higher, bullish. So this now is drawing my eyes to this untapped liquidity and the new week opening gap. I'm getting more interested in a trade at this point. So we're coming into now the end of the 2 AM candle, the open of the silver bullet hour. So silver bullet starts 3 AM. And it finishes at 4 AM. And we're coming close to this session liquidity here. So let's monitor what happens at 3 AM. We can potentially get involved within this silver bullet hour. So price comes up, nearly takes out the high, 255. Aggressively pulls back. We have a 5 minutes. So this is now the Cameron model. What we are looking for on the Cameron model, I'll stick it down here. We need, number one is we're looking for a clear draw on liquidity. So have we got that? Yes, we've got the clear draw on liquidity here. Number two is we are looking for a sweep of 5-minute opposing liquidity. So we can mark out our 5-minute opposing liquidity here. Number three, we're then going to need a 1 minute FVG reversal. So we're going to need to see the price sweep this liquidity, start reversing, leaving a 1 minute fair value gap. And then number 4, we're going to target the draw on liquidity. So I'm going to be looking up here for the draw on liquidity. Some additional confluences that I always like to monitor for are balanced price ranges. So if we see a balanced price range, that would be a nice confluence. Optimal trade entry. So if this pullback happens to come into an optimal trade entry, there's an additional confluence as well. And then finally, the open of the 15-minute cycles. So this is something that ICT has alluded to in the Cameron model, looking at the 15-minute swing highs, swing lows. So this is the 15-minute cycles that I've referred to many times in my previous videos, taken from Stacey Burke Trading, where we can see injections of new volume at the open of 15-minute candles. So if we get an entry in alignment with the open of a new 15-minute candle, that's additional confluence for me. So this is our checklist for the trade entry. So we've got a clear draw on liquidity in this situation. Our break of structure, or a sweep of 5-minute liquidity, will be here. So this is sell side. So we've got a 5-minute swing low. So we're identifying the 5-minute swing low. We've got a higher low to the left and a higher low to the right. The one in the middle is obviously our swing low. This one led to the current swing high that we've got. So we're keeping our eyes on this level. We're waiting for that to be swept, and then we're going to take a fair value gap entry on a reversal. So we have swept this liquidity now. We've left the bearish fair value gap. We've swept the 5-minute low. So I will drop to the 1 minute time frame now, and I'm going to be looking for a reversal off this. Now this is where this model differentiates from my own. Let's see if we can bring the rules over. This is where this particular model that ICT has outlined differs from my own entry model that I've been using recently. So I've used Cameron's model here in this particular trade, and it worked out really, really well. So we'll see we're breaking through this 5-minute low. We're looking for a reversal. So we're coming into 315. ICT says that we don't need a break of structure on the reversal. All we are looking for is a fair value gap in the direction of our draw on liquidity. So we can take that first fair value gap. ICT mentions in the Cameron model that they're using the 30-second chart. It's not something I've used before. I've stuck with the 1 minute chart because that's what I've been using for my continuation model. So we're looking for the first fair value gap now to get long. We've swept liquidity. We know where our draw on liquidity is. We just want a fair value gap to go back. Additional confluence here is we are now in the silver bullet hour as well. So we know where the draw on liquidity is. We're in the silver bullet hour, so the timings are correct. We're currently at 3:13. So the open of a new 15-minute candle is just about to start. So if we get a bullish fair value gap here, this will be where we set our entry, which we get. So this candle here, we create our 3-candle pattern to leave the fair value gap. Candle 1, candle 2, the gap is between candle 1 and 3. This also is a balanced price range. So additional confluences, balanced price range. We've got our BPR, fair value gap. This is the entry. For the long position, the stop loss is going to be below the low. Just as an additional check, are we at optimal trade? Because this pullback looks like it's very close to optimal trade entry as well. So you will pull it from the session low to the high. And we are, look at that. So we're exactly at the 618. So all of these additional confluences, as well as ICT's outline for the 1 minute fair value gap reversal and the draw on liquidity, they're all in alignment here. So this for me is A+ textbook setup. We know where the draw on liquidity is. We're already in bullish price action. This is just inducement. This is inducing people to try and go short because they think we've got a break of structure here, and then we get the reversal to come and actually take out the liquidity. Everything's stacking up. Clear draw on liquidity, sweep of 5-minute opposing liquidity, 1-minute fair value gap reversal, target, draw on liquidity. We've got a BPR, we've got OTE, and we've got the start of a new 15-minute candle. Look, we're at 314. So the entry when we get triggered in is going to be 315. So I'm absolutely 100% on board with that. We're going to be aiming to take out the Asia session high. If we scroll back, we can see the Asia high where the time starts at 7 p.m. New York time. Starting in a bit of a random spot. We've got these equal highs here, so this is the high that I'm going to be targeting. Expecting to take a run on these two equal highs. So that's our buy side liquidity that we've left over from Asia. So as the new 15-minute candle starts, we are tagged in and good to go. We've closed through the BPR, a little bit worrying. However, price now comes back and clears through the BPR. Strong, aggressive move. Left bearish fair value, bullish fair value gap, sorry. So this is what worried me. That candle there is the 3:30 news candle. This again is an excellent example. I released a video last night of going break even or going risk free, sorry, at 1-to-1. So this move here cleared 1-to-1 on this candle here, and then we had the pullback. So what's happened previously in my trading career is that I would have gone break even at this point. I'd have seen a big candle like that and I'd have thought there's no way I want this to turn into a loser. So I would have gone break even. This whipsaw price action here would have then stopped me out. So I would have made no money whatsoever. And then price is going to continue to take out these highs. So with the 1-to-1 strategy, by taking 50% of the trade off at 1-to-1, but not touching the stop loss, our initial trade idea is okay. We don't have to get worried about a winner turning into a loser because we have made ourselves risk-free, and then we can now continue to target the highs, which is what we were doing. So that's a really good example of why taking 50% off at 1-to-1, if you're nervous and you don't want to hold, because this is a problem that I had, works really, really well. You can see after the news drop, so this is news from the Swiss franc. I wasn't expecting that to affect price action like it did, but there we go, it has done. Price continues higher, takes out the swing high that we had, but as we mentioned, our actual draw on liquidity is taking these two equal highs from the Asia session. And we take those on the next couple of candles. Really, really solid trade, just over 5R, so 5.3R. Everything stacking up perfectly, and a fantastic example of how, if you just want to psychologically protect yourself, taking 50% of the trade off at 1-to-1 will avoid this situation where you have gone break even because price has already moved 2R. So you'd have moved 2R by then, you'd have gone break even and then got stopped out and missed out on the rest of this move. So by taking 50% off, you can just rest easy and let the trade play out because you know the ultimate draw on liquidity is here. So for me, in my early days, if I was 2R up and saw this pulling back to entry, I would have panicked so much and I would just close this out. You don't have confidence to let things run that long when you're in profit and see a winning trade turning into a loser. So that's why the 1-to-1, 50% off, just worked wonders for my psychology. And we can see that the Cameron entry, perfect. So I hope this was useful for you. If you enjoyed the analysis, please leave the video a thumbs up. If you have any questions or comments, just leave them down below. I will always do my best to get back to you. And if you're enjoying this content, then consider subscribing, dropping videos like this every single day. The channel's had some fantastic growth over recent weeks and it'd be fantastic to have you on board. Thanks for watching, and again, I'll see you in the next video.